In today's video, we're going to talk about 5 harsh truths in building lasting wealth. The first harsh truth: no amount of money on a statement will ever make you happy. And this is not to say your life won't improve as you scale the wealth ladder. It will, but at best it's a marginally decreasing benefit. The first $100,000 you're able to save will make a massive difference in your life. An equal $100,000 increase from $2 million to $2.1 million in wealth is still beneficial, but may not even be readily noticed, let alone materially increase your happiness. As a general observation, I notice a lot of people think there is a significant amount of relief or peace of mind that will be achieved by growing their wealth to certain points. Behavioral finance studies have consistently shown this number for most is right around 2 times the level of wealth they are currently at. So let's say you're at $1.5 million saved for retirement. If only you were at $3 million, things would be so much easier. And this is a fallacy that readily goes unnoticed by many. Think about the point in time when you were at half of the wealth that you are currently at. You probably thought the same thing. You have already achieved the wealth goals that you said would make you happy, but how much has actually changed? I think to a point this fallacy exists because when people envision the next level of wealth, they only look at the upside. When you're young and at the basic needs level, everything is about trying to get your head above water and start making more than you spend so you can start saving and investing for the future and avoid costly emergencies that can wreck your financial situation. The worries here are very apparent, but as you scale the wealth ladder, the worries don't disappear, they just shift. When you reach financial freedom, whatever that means for you, now fears often shift to, what if something happens? What if a Great Depression style event happens? What if I make a huge mistake and I mess up the situation that I'm in? As human beings, we are evolutionarily designed where what we have is never enough. When resources were scarce for the majority of our species' existence, this was a feature. But now that we live in a world of increased abundance, this feature has turned into a bug and creates this idea of the hedonic treadmill. The hedonic treadmill is a phenomenon where humans tend to return to a baseline level of happiness despite improvements in their circumstances, meaning our expectations adjust to create a new baseline right in the middle of wherever our current experience is. So imagine you have a life-changing event where your wealth doubles overnight. For some short period of time, you will feel all of the benefits of this life improvement. You likely will feel ecstatic that you have double the wealth. But in due time, this improvement will become your new normal. And the goalposts for what will make you happy next shift. In a sort of sadistic way, our greatest evolutionary strength historically has become a massive weakness in today's modern world. And so as we think about growing wealth and phasing into retirement, I would offer up that maybe pure happiness is the wrong target. Happiness describes the top end of our positive feelings, but we can only be happy if we have something to contrast against. We can only see the peaks if we also have the valleys. Maybe instead we should aim to attain something more like fulfillment or contentment. There's a concept called cheap thrills and deep thrills that might help illustrate how to move closer to fulfillment. Now, a cheap thrill is a flash of a positive feeling that is temporary in nature. An example would be buying something new. It feels really good right away, but that feeling quickly wears off. It costs you something, and so therefore is worth something. Think to your past on some of the best memories that you have. They likely came at some personal sacrifice. Raising children would be an example of this. You probably weren't always happy while you were raising children, but if it was done right, it was incredibly rewarding. Deep thrills are internally rewarding, where cheap thrills are external in nature. Focus on the deep thrills. Harsh truth number 2, everything comes with a phantom cost. Focus on the phantom cost to the same degree you focus on the upside. So my wife and I live in the North Woods of Wisconsin, and we were driving down a back road last week, and in front of us was a beautiful yellow Porsche being driven by a man probably in his mid-60s. Now, as we were driving, every time there was a patch of loose gravel on the road or a small pothole, this man would slow down to 15 or 20 miles per hour to ensure that nothing bad came close to damaging or came close to happening to his beautiful Porsche. Now, I'd imagine before this man bought this Porsche, he dreamed of buying a Porsche someday. He dreamed of driving through the woods in northern Wisconsin, his hair in the wind, going extremely fast. But it seems that all of that stayed a dream, because when he bought this Porsche, His reality was nervousness around a scratch here or there. And that's because every purchase we make or goal we achieve often comes with a phantom cost. Now, just because something has a phantom cost doesn't mean it's not worthy of achievement. For instance, fear and anxiety about losing your wealth is a phantom cost of building wealth. Despite this, building wealth is still 100% worth it. But being aware of phantom costs and trying to minimize them, I believe, is critical. When most look at a given purchase, they often only think about the initial price as that only cost. Gosh, it would be great to have a cottage up at the lake. That will cost me, let's say, $400,000. Okay, but that's just the initial costs. There are additional financial costs on top of that, like needing to buy 2 of everything. You'll need a second lawnmower, a second washer and dryer, and more. There's ongoing upkeep. If something breaks, guess who's on the hook for fixing that issue? Well, you are. That comes with a financial cost. There are also psychological costs. Do you think it will weigh on you if one summer you are only able to go up to the cottage a handful of times because sometimes life happens? Do you think you'll worry about if the cottage is all right if there was a bad storm at the lake last night? Then there are opportunity costs. If you didn't purchase that cottage, how much sooner could you have retired? This is not to say the cottage at the lake isn't worth it. Just that due to phantom costs, it will cost you a hell of a lot more than the initial purchase price. And so think about your current desires right now. What are the phantom costs associated with those current desires? Is it still worth it when thinking about those phantom costs? Harsh truth number 3. Real wealth is what you don't see. When most people envision wealth, they often think about the lavish side of wealth. If you have wealth, you can go on beautiful vacations, live in an incredible home, drive incredible cars. Many of us don't like to admit that they seek a certain level of wealth because it brings them status. It feels good to be financially above average. But the interesting paradox of this idea of wealth is that by definition, all of those things make you less wealthy. As soon as you purchase that $50,000 pontoon, you have $50,000 less in a depreciating asset with phantom costs. As Morgan Housel noted in his book, Psychology of Money, when most people say they want $1 million, what they really mean is they want to spend $1 million, which is the exact opposite of having $1 million. Now, as you know, I'm a huge proponent of using your wealth to benefit your life. Your goal should not be to endlessly accumulate wealth, but true wealth is achieved in the things that you don't see, not the things you do see. Having a mansion or a sports car doesn't make you wealthy. Having a level of wealth and a mindset that gives you peace of mind and contentment gives you true wealth. But no one can readily see that level of peace of mind. Time freedom and the financial means to design your day however you choose is real wealth. Again, none of these things are outwardly visible in a way that a giant house is. But this is where true wealth is actually hidden. Harsh truth number 4, not everything is in your control. There's an inherent level of uncertainty that comes with life. As a culture, we often denote this uncertainty by calling it luck. There's good luck and there's bad luck. There's a cognitive fallacy that I continually notice through many aspects of society, and it's called resulting. Resulting is to equate the quality of a decision to an outcome. For instance, a lottery winner might say, "What a great idea it was to buy that lottery ticket. We won." In reality, this was a terrible decision. When you buy a lottery ticket, you have a negative expected value, meaning if you played the lottery an infinite number of times, you would win at certain points, but those wins would be outweighed by the costs of losing. We have to have the ability to assess the quality of a decision separate from the outcome. Let me give you an investing example. Let's say that you are someone in the year 2000 that sold their company and got a windfall of $2 million. Now you took that $2 million and you invested it in a diversified portfolio. Okay, that's quite prudent. Well, the timing of this wasn't great. The US stock market was about to enter what we now know of as the lost decade, where we saw 50% drawdowns. This person might be thinking how dumb it was to invest this way or sell their company at this time. In reality, this person made a great decision but had bad luck in timing. It was out of their control. You can take another more recent situation of someone with $500,000 investing everything in Tesla in 2019. This is a real situation, by the way. I met someone who did this with actually a little bit more than $500,000. They rode the Tesla rocket all the way up to $10 million plus in wealth. Now, despite this incredible success, this was not a good decision. They got lucky. Sometimes in building wealth, you can make the right decisions and end up in a worse spot than someone who makes bad decisions. Luck and uncertainty plays a huge role in life. This is a harsh truth, but doesn't change the composition of what makes good and bad decisions. Here's a way to think about this. Let's say that we ran a Monte Carlo of your life and decisions. We simulate your life 1,000 times from here on out. Luck's role in life will mean there is probably a wide distribution of outcomes. Your goal should be to make decisions that lead to being successful in the greatest number of those simulations. Putting all your money in one stock might mean that you are insanely rich in 2% of those simulations, but will likely mean you don't reach your goals in 50+% of those situations. Those are terrible odds. And then finally, harsh truth number 5, building true wealth is boring. I find way too many people look for excitement in building wealth. On the screen I have a picture showing after inflation stock market performance over the last 2 centuries. And we see the market has grown by nearly 7% per year, which doubles your inflation-adjusted wealth every 10 or so years. Even with adding in some safety on a 50 to 70-year investing career, this should be enough for the vast majority of people. And guess what? It's boring. It's boring to invest in a broad stock market when there are individual stocks like Tesla growing 2,000%. It's boring compared to actively managing your portfolio or swinging for the fences on the newest financial instrument like Bitcoin. But boring is largely where reliable wealth is built. Huge swaths of millionaires got to their level of wealth through the slow and steady way of living below their means, saving, and then investing. Not through some fancy exotic investment, but rather through a 401k with boring options. Here's a chart from Standard & Poor's SPIVA report showing that on a 20-year time frame, 90+% of funds underperform their benchmark. These are often mutual fund companies that are putting millions into research and hiring staffs of analysts. And 90% of the time they underperform on not only an absolute, but also a risk-adjusted basis. This coordinates nicely with the idea of focusing on things we have control over. In building wealth, you can't control the luck and market returns. Maybe we are in 2000 right now and facing a lost decade in the stock market, but we can't control that. What we do have a lot more control over is our earning power. You can learn marketable skills right now that can translate to promotions or different opportunities over time that raise your earning power. You can control how much you spend and therefore how much you save. And it's interesting to see how some pick and choose the advice they take from some of the world's greatest investors. They get the idea that some of the best investors live incredibly exciting lives. In reality, it's been documented that the likes of Warren Buffett and Charlie Munger sit down and read for 5+ hours a day. And more importantly, enjoy this. Their day-to-day lives would bore most people to death. People take the advice like the quotes on the screen, construe this as being advice for the average person. Yes, some of the best investors own concentrated portfolios of individual stocks, but they also might go a decade without adding to their portfolio. They only own concentrated positions because they have read and thought so much about the given company that they know that company inside and out. They have the experience to know what they're looking at. The average person has no chance in competing. The best investors in the world thrive in boring and have the patience to stay there. I hope these harsh truths resonated with those that have built wealth and continue to build wealth. If you're wondering how you compare to others on your journey of building wealth, I think you might find this video right here quite insightful. We talk about the 3 major levels of wealth and show how you compare to others. Click right here to learn more, and always remember, you don't need more money, you need a better plan. Thanks for watching.